Well, hello everyone. Don Garman here for Mirador Capital Partners yet again. Here we are on a Wednesday. Let's see, it is April 12th, and I'm checking in today because this Friday starts the all important Q1 2023 earnings season. It's like report cards for companies. So I want to update you on my thinking or our thinking, and I think we are at a key inflection point, and so I want to prepare you all for what we think could lie ahead and how we intend to play it. So, looking back as I occasionally do at some prior videos, a year ago, when we were in somewhat in the beginning stages, but a very dramatic point in the beginning of the tightening cycle where prices were falling, seemingly haphazardly across various asset classes, stocks and bonds alike. Uh, One of the things I said in that video about when would it all end in terms of this down cycle? And we're now 2 years into this, really looking back to the first quarter of 2021. Uh, One of the things I referenced was that these cycles have two components generally. There is price, how far are things going to fall, and what is, we call that a drawdown from the peak to the trough. What is that space? How many percent down is that? But there's also a different component that I referenced, which is time. So this is a key component and a key moment, because one of the things I do as a thought exercise very often is I think about what the world will be likely thinking about 6 months forward as a way to gauge kind of where the market is, what's the market grappling with today. So why am I bringing all of this up? So this earnings season, starting Friday, with the big banks, we all have heard there's been trauma across the banking sector, is likely to set off what I believe would have to be a series of future projection markdowns among the largest companies in the world, which are housed in the United States. Why do I think that? Well, many anecdotal reasons. But one of the troubling pieces and where this particular video is going is the estimates for future earnings for the S&P 500 are that Q3 of this year would be the highest quarterly earnings ever for the S&P 500, which seems highly unlikely to me. And the next quarter, Q4 of this year, now only 3 quarters away, would be higher even still than Q3. So if you think about what earnings of a company are comprised of, it would be sales minus costs of those to achieve those sales, and oversimplifying, but you're left with earnings. And so we know businesses are cutting costs. We've heard about layoffs, but not really at the scale, certainly, that the Fed would like to see them. So we know many input costs have risen and lots of costs have risen. So short answer, I don't think it's likely. And in generally speaking, the direction of future earnings estimates has been a good predictor of prices. So I hope that this is a quarter starting Friday where there is some resetting of expectations, and that should generate some opportunities for us looking forward from there, because many of you have known and recognized we have been very defensively positioned for a while now. And I don't think, certainly nobody's complained about that to me in the flagship strategy that we run. So that would be the cue for us to start to adjust our positioning more significantly over the next couple quarters is if we see future expectations from earnings for earnings actually getting marked down. So I think it's clear that has to be coming. If I'm wrong, there's a chance that companies somehow are finding some financial engineering, or some secret pockets somewhere of growth that nobody has explored and can identify, that is generating faster sales growth than anyone knows about, lower expenses than anybody can forecast, or some mystery metric. If that is truly, we get through this earnings season and the numbers going forward haven't been marked down at all, then that's going to be the cue that we're too defensively positioned and we need to adjust. So it's almost like it will be adjusted either way over the next several weeks. We just can't exactly see which way it will go. We hope that the future expectations get marked down. Final point I want to make on the market in general is it's okay to think of it a bit like an inchworm. Even though there's not always progress being made at any particular segment of time, underneath it all, there are earnings that are happening that are compounding underneath. This is the reason why we can't just abandon and go to cash or money market until some bell rings in the future and we're all clear. It's invisible to the naked eye if you're looking, at the whole entire portfolio. But underneath it all are earnings that are growing and compounding for us all. That's really why we're in it for the long haul, and why people are so right to be focused not on quarters or even years, but on multiple year segments, because you want to be, invested when sometimes valuations compress to a point where they can then expand. And that's when we have the ability to trampoline forward, or leapfrog, or the inchworm metaphor. That's when things, everyone's rewarded for all of the patience that they've displayed, the patience that I absolutely feel is being tested. And I noticed that because this is the time when, after however many months of wondering when this is going to happen or that's going to happen, people are susceptible to all types of hot ideas, and people come out of the woodwork with new things you might want to do that promise instantaneous, of course, always upward and smoothly upward results. And certain people will fall for that every time. That's human nature. They always will. And despite our best efforts, we will not be successful in keeping everyone focused on the unassailable power of the earnings engine over time. But we will do our best to continue to do what we do best, and what I believe is clear will work for us all, or for those of us who stick around to let it work. So until then, on a positive note, we have a lot of new faces around here. So we're going to be doing some videos or some ways to introduce people over the next, couple of videos that give everybody a feel for a lot of the new blood and energy. And we actually have somebody else that we hired starting pretty soon. So there is a lot of upgraded capacity and really, really, really exceptional folks that have entered our lives and our world that we look forward to introducing to you shortly. So I'll leave it there for now. As always, if you notice, I'm a little hoarse. I've been ill for the first time since before the beginning of the pandemic. It's just a cold, not COVID, but I don't know that anybody draws the distinction or even cares anymore. It was a cold, and so my voice is coming back, which is great for some and not as pleasant for others. But I'm happy about it, because it's always frustrating being not feeling your best. But anyway, we're always here. Let us know, reach out, and hope everybody had a nice Easter, and we will talk to you soon. All right, thanks. Bye.